Last year, I bought this Airbnb in South Florida to add to my passive income portfolio. And I also started trading with prop firms, specifically with automated trading bots. And in this video, I'm gonna do a side-by-side comparison, which is ultimately a better passive income source, Airbnb or trading with prop firms with automated bots. And to help make this decision, I'm gonna break these two opportunities down by 6 criteria. Number 1 is the startup cost. Number 2 is the time or effort involved. Number 3 is the skills that are required. And number 4, the income that I've actually made from both of these opportunities. Number 5, the ROI. And number 6, the risk, most importantly. So before I go in and rate them on these different 6 criterias and show you the income that I was able to make from them, let's just make sure that we're on the same page and do a quick 30,000 foot high level overview of these two opportunities. So number 1, with Airbnb, this is pretty straightforward. I'm not talking about doing rental arbitrage or anything. I'm talking about actually going out there, finding a property to purchase, purchasing the property, then furnishing and designing the property, and then renting this on short-term rental sites like Airbnb and VRBO in hopes of making cash flow. Now, on the other hand, trading with prop firms and automated bots will refer to this as prop farming. So I'm talking about using proprietary trading firms. If you're unfamiliar, I've made a ton of videos on my channel, basically large capital firms that have these tests that you have to pay anywhere from like $100 to $500 fee. And if you can pass their test with making 10% profit without making 10% drawdown on the account, then they'll fund you $100,000 worth of trading capital that you then get to keep 80% of the profits. Now, I'm gonna be doing this all automated using our AI leaderboard from Blue Edge Financial. So I'm basically just picking the top strategies on this leaderboard, installing them into my trading terminal and letting it automatically enter and exit the trades on my behalf while I watch it trade. Okay, so let's get into this analysis. So first things first is the startup costs involved. So now let's talk about the actual startup costs that are involved in both these opportunities. So for the Airbnb, the property in South Florida that I showed you, the purchase price was $690,000. Now, generally, you're gonna have to put 20% down on a property like this. I was able to qualify for a special program where I only put 5% down. So my down payment on this house was $34,500, and then I took out a mortgage for the remaining $655,000 or so. Now, also on top of my down payment, there was also closing costs, which cost me about 3% of the total purchase price, which was $20,700. Now, I also went in there and I did some improvements to the property. So as you can see here, we went ahead and we furnished the property mostly with things that we found from Home Goods or we found from Amazon or stuff like this, added tables, beds, all the normal stuff that you need in an Airbnb. Now, we also went ahead and made some adjustments to the backyard. We added this putting green since it's in South Florida and it's a hot golfing community, which cost us about $4,000. We added this gazebo and this fireplace and this couch, which I think was maybe an extra $4,000 as well. And then we also went ahead, added a barbecue, a fireplace, outdoor shower, hammock, and we went ahead and also added lounge chair seating outside as well as a hot tub and put together this little game room in the garage with a pool table and an arcade. So with all of the improvements that we did to the backyard and furnishing it, this cost us a total of $25,500. So my total out-of-pocket investment for this was $80,700, which was my total investment here. Now, granted, if you were to put 10% down on this property, it would have brought your investment up to $115,000, or 20% down on the property would have brought you all the way up to $184,000. Now let's take a look at prop farming on the other hand. So my strategy with prop farming was to always be taking 7 challenges at a time. And on this sheet, I tracked exactly what my cost was for every single one of these challenges that I've taken up until this point. And on average, I paid $415 for a $100,000 prop firm evaluation account, which brought me to a grand total of $2,905. Now, you don't have to do 7 at a time, but this was how I was able to meet the income that I wanted to make from this opportunity, and I'll show you that in just a second. Now, also with this prop farming approach, I was wanting to limit my downside risk as much as possible by using a hedging approach. And if you're not familiar with this strategy, I've talked about it more in some of my other videos on my YouTube channel. I even documented my journey to getting funded $500,000 with prop firm capital without losing money to failed prop firm challenge fees. But essentially the way that this hedging strategy works, hedging means that you simply buy something to protect yourself against something else, kind of like how you would buy a raincoat or an umbrella to protect yourself against the rain. It's just something smart to do. So the way that this works is instead of just trading one account, I'm going to be trading my prop firm challenge account over here. And then on the other account, I'm going to be trading on my personal brokerage account. And the idea is that if I'm taking a sell trade over here, then on my prop firm brokerage account, I'm going to be taking a buy trade and vice versa. And again, we have an automated hedging bot that does this automatically, so you don't really have to worry about manually doing this. But the idea is if I go ahead and I lose my $415 in this challenge fee and I failed the prop firm challenge, then the idea is since I took opposite trades, I'll make back this $415 on my personal account. I'll take that money and I'll simply use that to buy a new prop firm challenge, and I'll rinse and repeat the process until I actually get funded. So because of that, I need to have some extra funds that I allocated towards my personal brokerage account. Now you're gonna need anywhere from 3 times to 5 times the challenge cost. And I just did it really conservatively here. So I had 5 times the challenge cost, which was gonna cost me around $2,500, a little bit less than this, but we'll call it $2,500 if we assume a $500 prop firm challenge account, which means that I needed a total of $2,500 times 7 challenges that I'm taking. So a whopping total of $17,500 that I funded into my personal brokerage account. So my total out-of-pocket cost for this was $20,405. Now I'll admit I am going pretty aggressive with this. You may not want to do 7 challenges at a time, or maybe you don't want to fund it with 5 times. You only want to fund it with 3 times. That depends on how far down the process you're funding. A conversation for another time, so I'm not going to dive deep into that. But some of you may think that, I don't have $20,000 to get started with this. And what I did is I didn't actually use any money out of my own pocket. I actually used a credit card because the bank had already loaned me money on this. And the cool part about credit cards is generally you don't have to pay off this entire balance right away. Generally, they give you 30 days to make what they call the minimum payment. And that minimum payment is generally around 2% of the balance. So 2% of $20,405 is basically $408 per month that you'd have to be out of your pocket for. So what I did is I put this all on a credit card, so that way I didn't have to take any money out of my own pocket. And then 30 days later, all I'm out is this $408. So worst case scenario, say this thing took me 3 months to get up and rolling to get my funded accounts and start making payouts. Well, worst case scenario, I'm only out $1,200. And it's the same thing that I did with the house, right? I only put down $34,000 and I used a loan or a mortgage to cover the rest of this. So the same thing that I'm doing with prop farming. I'm just using other people's money to fund this investment to get started. And just like with prop farms, we're trading other people's money, so you might as well make the investment to get started and use other people's money as well. So if we're just breaking this down side by side, of course, it's not even close. Prop farming or trading with prop firms, even at whatever scale that you're doing, is gonna be significantly cheaper than doing Airbnb. That's without a doubt. And you may have thought that's pretty obvious, but that's not the only thing that we're going to evaluate. We're also going to evaluate how passive this is, meaning like how much time and effort does this actually take to get started. So with Airbnb, it took me about 2 months to find our property. And this was 2 months of searching. So I had to do some analysis on the different markets that I was interested in. And then also I set up a listing search filter on Zillow where I basically said, hey, I only want to see properties that have a minimum 3 bedrooms that are minimum 1,500 square feet and that have a pool. And so I'd get sent new listings that came on the market every day. And so this would take me about 1 hour a day that I spent about 2 months searching for the exact property that I wanted to find. Now, after I found the property and was able to close on the property, we actually flew out to the location in South Florida and spent about 30 days setting up the property. Now, thankfully, I had my fiance that was doing most of the setup. She was running to Home Goods and running, returning stuff from Amazon and going to different home decor sites and, doing all of the interior design work, as well as managing the landscapers, managing the handyman that were doing different random odd tasks around the house. But long story short, it took us about 30 days to get this property up and going. And she was working about 5 hours per day on this. And I was also working on this as well. Now, realistically, after about 3 weeks, we more or less had the vast majority of the stuff set up, but we ended up staying there for 30 days anyways to enjoy the property after it was set up. So this was pretty much the initial setup as far as what it actually took. And then as far as ongoing management, thankfully, my fiance is the one that is managing the Airbnb, and she spends about 1 hour per day managing it, which is coordinating cleaners, coordinating the pool guy, messaging guests back and forth, or messaging potential clients that want to book the property. So she probably spends about 7 hours per week on this ongoing, and I spend really no time on this. For me, it was front loaded in finding the deal and purchasing the property. That was where all my time was spent. And then after it was set up, it doesn't really take me any time. Really, I mean, I've spent less than 1 hour per week on this. So that's the Airbnb side of the time and effort equation. Now for prop farming, there wasn't really this big setup time to get going, but there is kind of more of time that's spent on the managing. So with prop farming, I probably spend 30 minutes per day managing it. So basically what I'll do is first thing in the morning, I'll take a look at my different accounts just to make sure that they're trading properly, making sure that there's no errors, making sure that the hedge bot is also trading properly. And I'll do this every single day that the market's open, which is 5 days a week. And then I'll also spend some time on Sunday, so really 6 days a week, where I'll make sure that I have any new challenges set up, which is really what takes me the most amount of time, is actually setting up the bot and making sure things are ready to go for the week. So for me, it probably takes me 3 to 4 hours per week, and I've gotten pretty quick at this. So if you were to do this, maybe it takes you 5 to 6 hours per week when you get started, but you'll also get quick at it. And also, if you're taking less, maybe you're only doing 1 or 2 challenges at a time, then maybe it takes you 2 hours per week. So in terms of which one actually takes more time and which one is more passive, I'd say that Airbnb is front loaded, meaning that the research, the finding the property, and the setup took me a lot of time, but now it's pretty much no time ongoing. Whereas the prop farming, it didn't really take me this big amount of time to get started, but it does take me on average probably 3 to 4 hours per week. So all in all, I'll say that Airbnb is probably a little bit more passive. Now, the next thing that we'll take a look at is the skills that are actually required to be successful in each of these opportunities. So number one, with Airbnb, you do have to know about the market that you're getting into. You need to know how to do basic Zillow searches and filtering. You do need to know how to use a basic Google Sheet so that way you can do projections. This is really important. So that way you know, what is this estimated gonna cost me, this property? You know, factoring all things, taxes, insurance, mortgage, cleaning, all this sort of stuff, as well as what could this property actually make me. We used a software called AirDNA, I believe. Another software we used was called Price Labs to give us an idea of what we could actually make with this property. So this is an important skill, is doing accurate projections. Also, negotiating is important when you're purchasing the property. We were able to negotiate a little bit, but because the market was so hot, it really wasn't something that we could negotiate big time on. Probably the biggest skill that's really important for you is being good at design. Now, I am awful at design. Maybe as you could tell, my fiance happens to be an interior designer. She's amazing at this. So I'd say I could have not done this, honestly, unless I hired a designer or I had somebody that I was partnered with that was a designer. This is a really, really important part of the Airbnb business, making sure that number one, you pick up a property in a market that you know that is projected to actually have cash flow. And then the second thing is actually making it look good and appealing. So this is a really important skill. Also, management skills. So one of the other key things that you need to know how to do is how to find a good team, specifically a great cleaning team. So we interviewed like 5 different cleaners to find ours that we're really, really happy with. But this is something that is ongoing as well. You need to be able to coordinate with them to make sure that they're coming and cleaning the property on time. And then the last thing that you need to be able to do is to know how to price your property, which again, we use this tool called Price Labs to help us price our property. So I'd say all these skills for Airbnb, they're all learnable skills, really. The one skill that I think takes a little bit of natural skill is the design, which is, I don't know, I think it's something that you're born with that you're not really able to be taught. Now, as far as prop farming, I think that everything with prop farming, you are able to be taught. It's not difficult. Number one, learning basic trading terminology. There's this website called babypips.com that you can learn all the basic trading knowledge within the matter of like a week. You need to have basic computer skills. So I mean like being able to use the internet, being able to download a file, install a file, maybe install an application. Basic computer skills are important. Also basic MetaTrader skills. So this is the trading terminal that we trade on. You need to be familiar with it, know how to move around in that, what different errors mean, this sort of thing, which again, we have videos on how to do this, but this is also something that can be confusing at first, but after you do it a few times is relatively simple, as well as setting up the bot. Again, looks like Greek when you first do it the first time, or at least it did for me if you're not familiar with MetaTrader. But after you do it 3 times, it's really quite easy. And then probably the most difficult skill that you need to have is patience, because this is something that it's not just day one you start making money. It's something that it takes a few tries to get a funded account and actually get a payout. And it's kind of more like a locomotive train to get going, where it takes a lot of energy and effort and attempts to get funded and then to actually get payouts and withdrawals. But once you get the process moving, you have funded accounts, then the payouts just start to pile on. So in terms of skills that are required, I would say that both opportunities require you to learn some skills. I think that most of the skills are definitely learnable. And so I would give it a tie. Okay, so now most importantly, let's take a look at the income that I was actually able to make with these 2 different opportunities. So you can see my P&L here with the property in South Florida. Basically the first year that I had the Airbnb, it made $120,000 in gross rental income. So over the course of the year, it made about $10,044. And as you can see here, during the winter months, it definitely makes more money. You can see December, February was really hot, so was March. And then kind of in the summertime, especially September and October, the property was not as busy, simply because this is a vacation market where a lot of people from the Northeast will come down to South Florida to rent it and vacation at. Now, in terms of my expenses, obviously I had a mortgage, I had taxes to pay, I had property manager that I paid, which is my fiance. I had to pay for cleaning, pest control, landscape, utilities, pool cleaning, random Amazon stuff like buying towels and coffee and all that random stuff, Wi-Fi, different softwares that I was using. So my net profit for the year was $14,545. And if I were to break that down monthly, it cash flowed about $1,212 per month. Now, granted, the 10% management fee that I did pay to my fiance, that's still going to our household. So I guess you could tack that on. Maybe it'd be an extra $1,000 per month. So it would have been $1,212. But if you want this to be totally passive, like I wanted it to be, then you're gonna have to pay that management fee. So my net cash flow was $1,212 per month. Now, real estate also has some other bonus factors that come into play, which are depreciation, appreciation, and debt pay down, or your mortgage being paid off by somebody else. So depreciation, right? You can depreciate the property over the course of 27 and a half years. I did some basic math here, assuming that I was at a 35% tax bracket. This would have basically broken me down to $548 per month in kind of real world savings that I would have been paying to Uncle Sam that I was able to write off in taxes. Now, also there's appreciation. So I bought the property for $690,000. Over the course of 1 year, it appreciated to $755,000, which according to Zillow, so take it for what it was, but basically I had $65,000 worth of appreciation in year 1, which was 9.5%, or if you break this down over the course of the year, was about $1,688. After you take into the account that when you sell the property, you'd have to pay a 6% realtor fee, which, on this total purchase price. So if you were to sell after 1 year, I factored this in, it would have been about $1,688 in real world appreciation that it could have factored in had I had also paid the 6% closing fee to the realtor. So again, these are ballpark projections. Just take my math skills for what they are. And then the last thing is my debt pay down. So I was able to pay down the principal about $8,184. If you divide that by 12, it's about $682 per month that I'm able to pay down, or meaning that I'm actually getting in equity in this investment. So if you look at my simple cash flow, it was about $1,212 per month, but with these bonuses, depreciation, appreciation, and my debt pay down, it really means that I, in a sense, was making about $4,130 per month, which is pretty good. So on the other hand, let's compare this with my prop farming income. So far, I've made $21,150 in withdrawals. And now granted, I've only been making payouts for the last 2 months, but I do have these statistics, and then we'll do a projection. So for June, I made $10,276. And so far in July, I've made $10,874. Now I'm also only 3/4 of the way through July, so I expect my total payouts to be maybe closer to $13,000 or $14,000 when July is all said and done. So what I've gone ahead and done is put together this simple potential projection calculator, which shows the potential profits that I could make. And again, this is not guaranteed. This is just a projection based on averages and based off of stats, but from what I've seen so far, it's fairly accurate. So here I've gone ahead and I put in my challenge account size of $100,000. I put in my average challenge cost of $415. I put in my funded rate, which was 32.5%. So I put that in here. And then I took my average days to pass both phase 1 and phase 2, which from what I've been seeing is about 35 days. And also if I look on the leaderboard here, I can see the average days for phase 1 is between 15 and 24 days. Generally, we're able to pass phase 2 even faster than that. And so I put a projection of around 35 days to get funded. Now, like I mentioned, my goal is to always have 7 challenges running at a time. So that means that they're either in phase 1 or phase 2, but I'm always in the challenge process, 7 of them at a time. If I get funded or I lose an account or I fail a challenge, then I'm starting a new one immediately that same day. So I'm always in 7 at a time. I'm also basing that I'm going to get 2 payouts per month. That's what most prop firms are able to do once every 14 days. And then my profit split of 80%. Remember, the prop firm takes 20%. I'm only going for a 2% profit target. So once I get my funded accounts, I'm trading more conservatively, only going for a 2% profit target. And I've been able to hit that 2% profit target 82% of the time so far. So these were all of my inputs, and here are my outputs. It said that I needed about $14,500 to hedge with. It says that I would get a funded account basically every 15 days, and it would basically give me almost 2 new funded accounts per month. And I had a 33% chance of losing a funded account in any given month. So all of that to basically say, this is what I could project on how many funded accounts I could have, and then what my average profit would be based off of these numbers. So it said month 1, about 8,500. Month 2, I'd get more funded accounts. So it'd grow up to about 14,000, then 18,000, then 20,000 as I got more and more funded accounts, and then kind of cap off here at about $25,000 per month. And I projected that my year 1 income could potentially be $259,000. And are these projections actually accurate? Month 1, it said I'd make about $8,500. I made a little bit more than that. Month 2, it said I'd make about $14,000. I think I'll make probably pretty close to that. And we'll see. Again, this is a projection and I'm being totally transparent with you. I could make less than this. I could make more than this. This is just a projection based off of those statistics. And it seems to be somewhat accurate. So I'll take it for what it is. But let's say that my goal is only to make $200,000 this year, which I think is realistic. If I divide that by 12 months, then that's going to give me about $16,666 per month worth of income. So again, if we're just looking side-by-side comparison, obviously I'm making a lot more money with prop farming, even with my bonuses here. You know, I'm making $4,100 and I'm already making $10,000. So in reality, prop farming, I'm making a lot more income. So in terms of ROI, how does this actually shake out? Again, I invested $80,000 into the Airbnb. My simple cash flow was about $14,000, which means that I got an 18% ROI, which in a traditional investment, I think this is fantastic. This is awesome. Now with the bonus appreciation, depreciation, and debt paydown, it actually means that I would have got like a 61% ROI if we include those things, which is incredible. However, it just doesn't really hold a candle to prop farming, as you probably could have guessed. I invested $20,700 into prop farming to get it up and going. I already made $21,000 in withdrawals, which is a 103% ROI. And if I'm able to make my goal of $200,000, then that'd be a 980% return on investment in the first year, which is pretty dang good if you ask me. Now, lastly, and most importantly, let's talk about the risk that's involved. And before I do that, if you're interested in trying our prop farming trading strategies, then you can go on over to www.propfarming.com and you can apply to join our trading team. So now let's talk about the risks. So with Airbnb and with prop farming, there are substantial risks involved. I'm not saying that either of these are risk-free or low-risk investments. Both of them have their own risk. So with Airbnb, there's a few risks. Number one, you could choose the wrong market, meaning that the market that you choose, there's way too much competition, which is another thing. Competition has gotten heavy on Airbnb. It's no longer as easy as it was back in the day. There's a lot more competition everywhere, especially hot markets like South Florida. There's also housing market risk. We saw the crash in 2008. Now, I'm not saying that's going to happen again. It's probably unlikely, but there is always housing market risk There's also the risk that Airbnb doesn't allow you to be able to rent in your neighborhood. This is also a risk. Also, if you get bad reviews, this is a huge risk because Airbnb is not going to promote you or put you to the top of their search engine. There's also risk in not finding a good team if your cleaners are not cleaning the property well or they're not doing it on time. This is also leaving you susceptible to bad reviews. Also, one of the most important things, if you did a really bad job on your projections or you thought you were gonna make way more money than you ended up making, then you may be required to force sell. And this is kind of the big risk, is if you do any of these things wrong, then you may be forced to sell your property at a loss. So you spent all this time finding the property, researching, doing the projections, purchasing the property, then designing the property, and then managing the property, and it doesn't perform like you want. So you may have to force sell. So the big way that you can mitigate your risk here is to make sure that when you're doing your projections, make sure that this property could break even as a long-term investment. So God forbid something bad happens with Airbnb, or you totally mess up your projections, or you get bad reviews, or whatever the case may be, make sure that you could rent it out as a long-term 12-month rental in about break even. Now, it's a little bit harder in this market to be able to do that with interest rates as high as they are, but this is what you want to shoot for. Get close to break even on a long-term rental, figure out what comparable properties are renting out for long-term in your neighborhood, and hopefully that can cover your monthly costs. Now with prop farming, there's also risks involved. Number one, you're risking your own money. Now, hopefully you're using the hedging strategy, so you're not really risking that, but you are using that capital to help hedge your risk. But there are risks of shady prop firms. Like, all these things have to do with shady prop firms, but there's some shady prop firms that are out there that have been banning people, that have also been denying people payouts. So this is definitely a reality. And we've seen that sometimes inside of our community. It's not rampant, but we have seen shady prop firms shut their doors completely. Even prop firms that, again, like I said, will deny people for no apparent reason a payout. So this is a risk that you take when you're trading with prop firms. So the best way to mitigate this risk is to make sure that you're working with legit prop firms that have been in business for a long time, and then also to diversify. So to not have all of your funded accounts with one prop firm, because God forbid they ban you or they don't give you a payout or they shut their doors altogether, at least you have other prop firms and other funded accounts. But this is a real world risk. The other risk is that I'm a liar and this just doesn't work. And we have a way to mitigate this risk. So if you just decide to join our trading team and get started with us, and it doesn't work and you're not able to get a funded account, then we'll give you a 100% refund, and we'll also give you $1,000 cash for wasting your time. So there's not really a big risk in trading with us specifically, but the bigger risk is in trading with these prop firms, because ultimately it's their business and they can do whatever they want. So in conclusion, I think both of these opportunities are great. They both have their own risks. They both require some sort of time and whatnot. But I think if I'm to be honest, and I'm not trying to be biased, although I may be biased, but just reality, if you just look at it really objectively and logically, the amount of money that you have to invest and the potential return that you can get from prop farming, it just far outweighs it. And the financial risk with prop farming is a lot smaller also at the same time. So in this case, again, I'm choosing prop farming, but let me know. What would you prefer? Let me know in the comments below. Did I miss this? And also, did you like this video? If you did, please let me know in the comments below. Like, subscribe, and turn on the post notifications, and we'll see you in a future video.